This video is an overview of DeFi and airdrop strategies on Coinbase's Base chain. Recent growth on Base has been nothing short of astounding, and with growth comes opportunities. Welcome back to Dynamo DeFi. My name is Patrick, and before we get into the video, remember that nothing in this video is financial advice. With anything in cryptocurrency, including DeFi, you still need to do your own research and understand all of the risks. Now let's get into it. To kick things off, let's talk about the recent growth on Base and the current state of Base's overall ecosystem. If we hop over to DeFi Llama, great resource for all sorts of on-chain statistics, then you can see that the total value locked, that is the deposits in DeFi protocols on Base, has grown from around $440 million at the start of this year up to $2.5 billion now. And in fact, just from early September, it's added a full $1 billion in deposits on DeFi protocols. Similarly, if you look at volume on decentralized exchanges on Base, you can see a clear uptrend recently. And if you convert that to weekly, then you can see that last week was in fact the highest volume week ever, with $5.7 billion traded on Base exchanges. If you go back to the beginning of September, then you can see that we were running at only around $1.5 billion weekly. So incredible growth in literally just a month and a half. And this growth has now made Base the largest Ethereum layer 2 across several metrics. In terms of TVL, it just recently flipped Aerodrome, and in terms of 24-hour volume, it's now one of the largest chains, period, let alone in Ethereum layer 2, third behind Solana and Ethereum itself. In terms of funds that have actually been uploaded to layer 2s, Base is currently number 2 behind Aerodrome with around $7.8 billion of assets on chain, compared to $13.67 billion on Aerodrome. By the way, if you want to learn more about these sorts of metrics and get weekly updates with a highlight of on-chain metrics, check out my newsletter, dynamodefi.substack.com. Here I send out curated farms, metrics, and news every week. And if you sign up for the premium version, then you get access to a comprehensive set of videos teaching you how to do this sort of analysis yourself. All right, now let's talk about some strategies you can use to earn yield and qualify for airdrops on Base today. To start, a lot of these strategies are going to be on Aerodrome. Aerodrome is the liquidity marketplace on Base. It's the largest decentralized exchange on Base. It is the hub of, I would argue, a significant portion, if not most, economic activity in the Base ecosystem. And with a lot of economic activity comes a lot of fees, and with fees come opportunity to make money. So Aerodrome is where we're going to start our hunt for yield. If you look at their liquidity pools now, then you can see that many of these pools have substantial yield on blue chip or high quality assets. For example, on Aerodrome's own Aero token, if you pair that with USDC, you can earn 59% APR. On DOLA and USDC, two stablecoins, you can earn around 22%. On ETH and USDC, you can earn 12.3%. This pool here that says CL100, that's concentrated liquidity. We'll talk about that in a minute. But to start, let's just look at some of these higher quality pools on Aerodrome that you can use to earn yield today. One useful way to find some of those pools is to click on stable, and that doesn't necessarily just means stable coins. What it means is two like assets. For example, wrapped ETH and MS ETH are not stable coins. They are ETH and then a liquid staked version of ETH. But with those two coins, you're not really worried about impermanent loss. So you can earn 17% yield without worrying about that. Similarly, there's TBTC and CBBTC with 7.5%. I think that's one of the better Bitcoin yield pools that's out there, certainly on an Ethereum-based protocol. And then you even have some Euro-based pools. This one has 17.9%, not too shabby. This one has 29%, although I'm not too familiar with these stable coins, so you may want to do some research before going into that one. And then if you go over to Volatile, you're going to have a lot of Coinbase ecosystem tokens, things like Well, for example, and a lot of these have extremely high yields. However, I would always remind you guys that you don't want to buy things just because it has a high yield. You want to buy it because it's a token that you have conviction in, that you're willing to hold through dips, and that you understand the tokenomics of. And then if you can earn a high yield on it on top of that, even better, right? But I don't want you guys to see these things and think that it's immediately something you should ape into. But that's Aerodrome. And if you want to go one layer up, then there's also a yield aggregator called Beefy, one of the best yield aggregators in crypto. I very rarely use yield aggregators myself because they add a layer of smart contract risk. However, Beefy has been around for over 3 years now. It's battle tested across dozens of chains. Beefy, I actually think, can be a very powerful tool at your disposal. If you just go to beefy.com, first thing you'll have to do is filter to base, and you'll see all of these pools, and they're not all in Aerodrome. However, most of them are going to be on Aerodrome, and that's because that's where most of the economic activity is happening. That's where most of the pools are on base. And where I really think Beefy stands out on base is these CLM vaults on Aerodrome. Remember back here, I mentioned some of the CLM vaults that we were going to talk about later. Well, this is them. And you see these high yields, it's because you're only providing liquidity for a certain range of prices. However, if you're not a highly experienced yield farmer who's willing to spend a lot of time managing that liquidity, it can be pretty difficult to do and can result in you experiencing very high impermanent loss. However, if you hop over to Beefy, they have these CLM vaults, and these manage that concentrated liquidity for you, allowing you to earn, for example, an average of 24% APY on this vault of Super O ETH B and Wrapped ETH. And you can see they have a whole variety of tokens in these CLM vaults here. And if you want to go even up another step further from Beefy, you have Velvet Capital. Velvet Capital is a yield farming platform that I've seen gain a lot of buzz recently. And basically this allows people to create their own vaults that will contain a collection of other vaults. So for example, we see this one here, this Hardcore Labs stablecoin vault. And this one, I'm not saying you should necessarily invest in it. I chose it because it was the top one. But what this is it's DOLA USDBC, DOLA USDC, and USDZ USDC. And each of these are relatively high yield stablecoins on Aerodrome, and then they are aggregated through Beefy. And then what this pool is doing is basically combining all of those to create this high yield stablecoin vault. You also have, for example, this vault here, BTC ETH Sol, and that is a wrapped version of Solana from Universal Assets, and then it's a wrapped version of BTC, and then ETH. So you're now earning some yield, and you're holding BTC, ETH, and Sol, arguably the top 3 blue chips in crypto. And one of the assets I just mentioned in the Velvet Capital Vault was what I called a universal asset. This is one of the other interesting things I came across on Base recently, and basically these U assets let you access coins which aren't normally EVM, aren't normally available on Base, but you can access them and use them in DeFi. So you have USOL, USUI, UDoge, UNEAR, and there's been wrapped versions of many other tokens on other chains. So this isn't something that's necessarily entirely new. I imagine there's some things on the back end that they're doing differently than many of their peers. But I think this is a new thing to Base, where you can now access a lot of these non-EVM tokens. And if you look at this chart of the weekly protocol volume, then you can see it's gone from 0 or close to 0 over the summer to several $1 million a week now, which is still relatively small, but growing exponentially. To wrap things up, I want to share a couple airdrop opportunities that I'm looking at on Base. The first of these is a protocol known as Anzen Finance. What Anzen does is it has a stablecoin known as USDZ, which is backed by real-world assets, and the real-world assets that they use to back it are private credit. You can see here examples of these, such as installment lending, SMB merchant receivables, factored invoices, and PO financing, corporate loans. And because these tend to be a riskier type of loan, they tend to have higher interest rates. However, I think this really speaks to the future of stablecoins, where eventually you'll have all sorts of stablecoins with different types of risk preferences. And for people who want to earn that higher yield, then there's going to be a place for those sorts of stablecoins as well. But crucially for our purposes, Anzen does not have a token right now, and they do have a points program. And one great way to earn for their points program is using the USDZ USDC pool back over on Aerodrome. Like I mentioned before, Aerodrome really sits at the center of a lot of the strategies today. But that pool alone has 53.67% APR. So take out the points, take out the airdrop. That's really a top pool for stablecoins anyways, partially because this stablecoin has a little bit extra risk than something like USDC. But then add in the fact that you have these points and you potentially earn an airdrop from a fast-growing real-world asset protocol, I think could be an interesting opportunity. And then finally, we have an application known as Sin Futures. Sin Futures is a perps trading platform, and it's the largest perps trading platform on Base and one of the largest perps trading platforms in all of DeFi. It's currently doing billions of dollars per week in volume, and they have an ongoing points program. If you go over to the Odyssey section here, then you can see that you earn O_O points, and you earn those by using the protocol. And their next epoch, Epoch 16, starts October 15th. And although some protocols do run points programs for a long time before doing any sort of airdrop, generally speaking, there is usually some sort of conversion from points to tokens. So if you want to qualify for an airdrop, you want to trade crypto, Sin Futures on Base could be a good way to do both at the same time. Let me know down in the comments which apps on Base you're using this month. For more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.